Good afternoon, everybody. This is the ARMR Report. I'm your host, Brett Rosenthal. This is a podcast and live stream about stock market investing in the millennial age. This is not your dad's stock market, certainly not your granddad's. This is a market controlled by machines, algorithms, and the long arm of the law, if you will, from central banks across the world starting in 2008. So the world changed. Central banks can start buying equity indexes whenever they want. And so it makes it very difficult on a short-term basis to figure out what the market's really doing and what the real values are. I hear people talk about valuations all the time and try to make investment decisions based on it. And I get it. Hey, I get it. That's what everybody always did for decades, centuries maybe. But when central banks around the world have unlimited supply of buying power, and you try to figure out what the value of a company is, now all of a sudden it's not apples to apples anymore. And so you get the rise of the machines, algorithms that are dominating intraday trades, multi-day trading practices, and they definitely impact long-term buy and hold investing because the volatility is so fierce. And so what we try to do here is give you a weapon to compete in that kind of environment. We have proprietary algorithms that we use to manage our own private capital as well as high net worth individuals. We do all of that through our affiliation with Interactive Brokers. So what I like to start the show on every week is a discussion of what our top five algorithms that are designed, proprietary, volatility designed algorithms for the big indexes. And from the big indexes flows all of our risk management technique. So we've got the S&P, the Dow, the small cap, the NASDAQ, and the momentum indexes. And we have them all dialed in and calibrated. And so let's start there before we launch into the rest of the show, where I'm going to step away from algorithms for a little bit during the show and talk about fundamental analysis, because this is a combination of fundamental analysis and millennial execution tools. That's what we're doing. And so I think it's worthwhile spending some time on this show going over two investment themes that we think are incredibly important at this stage going forward. And so while I may be 100% cash right now in a conservative portfolio, because I might say to somebody, look, if you don't want any risk, now's the best time to get out of the market, right? Because we've been talking about this for a while on these podcasts. We started on the 24th of September saying you got to start reducing your exposure because small caps are leading the decline, mid caps are following. And then, of course, the big cap indexes followed in October, and we've been in a decline ever since. And so when the averages are this far below the 200-day, the 50-day, and the 250 are in downtrends, this is the most dangerous time in the market, and nothing's changed about that. I know we had a reversal off the low on Monday. We had an attempt to rally yesterday that failed, and now we're getting another attempted rally that's getting a little bit more traction. But none of that has changed the overall picture that risk is incredibly high. So we'll start the show there. Risk is incredibly high. You want to be defensive. I have said on the show the last couple of days, and we covered this yesterday about how we're trading volatility. What we're doing is to short the rallies and then, buy back some of that on the sell-off. So yesterday we actually exited our entire put position and booked a profit on the S&P puts. And so on these rallies back up, which we're expecting, and go back and look at the other podcasts, if you will do me that courtesy of the last couple of days. You can find them on our website, rosenthalcapital.com. because I talked about the importance of volume weighted average price, and the algorithmic calculation we use is the RCM VWAP, which is our own proprietary VWAP that uses top day and multi-day volatility to determine where the real volume weighted average price is. But I digress. What I'm saying here is we laid out for you chapter and verse that we expected the market to rally in here to close VWAP gaps. And this is exactly what's happening. So there's no surprise yet in the behavior of the market. And it's why we don't change our stance yet, just because the market's had a couple of up days. We expected a couple of up days. You know, I mean, we told you about it. I think it was on Friday. We did it again on Monday. We said, look, when the market gets so far, so many standard deviations below the volume weighted average price, it's particularly the S&P, is going to have a magnet-like effect to go back up and close the VWAP gap. And then once you close the VWAP gap, then the question is, what's next? You know, you have two nickel-sized guys alone in the world. What are the possibilities? Okay. One of my favorite movies. So the question is, what's next? So now we've gotten up to that VWAP. By the way, if anybody knows the movie I'm quoting, please feel free to direct message me on Twitter at Brett Rosenthal, B-R-E-T Rosenthal. Imagine the possibilities. Two nickel-sized guys free in the world. What? So we expect this rally up here. We're there. What happens next? If we can push higher from here and have more constructive behavior in the market, hey, we might get a risk-on opportunity on all the indexes, and we'll start putting money back to work. But we're certainly not going to jump the gun and be early, because we're in the worst possible setup for market declines right now, technically speaking, using the algorithms and probabilities and percentages. This is the most dangerous time. And a couple up days doesn't change that. That's just normal behavior in a downtrend. So now that we've closed that gap, how do we close the day today will be very important. And probably more importantly is, how do we close the week? Where are we Friday at the close? And then you look at that weekly candle and what's the behavior of the market. And so before I would really change my stance and before our algorithms would flip from negative to positive, I think you'd have to see a weekly close that would affect the change. So Monday, Tuesday, Wednesday, that's just typical. Wednesday morning, it's only 12 o'clock right now, right? So it's what happens between now and the close that's really important, and then Thursday and Friday. All right, so without any further ado, let's get to the idea of pot stocks, cannabis stocks, marijuana stocks, whatever you want to call them. You know, right here on the ARMR Report, along with all of the algorithmic risk management and all the talk of big index investing and how that directs our approach and how important risk management is, while I've been saying all of that, I have been absolutely pounding the table periodically, going back to the 15th of August, on how important the investment opportunity is in pot stocks, cannabis stocks. I don't think you all really understand yet how important this investment opportunity is. Look, there are going to be bumps along the road, and it's incredibly early in this space. But I've been doing this 30 years, and during that 30-year period, I've come across a couple investment themes that have made me a lot of money. One theme that we all can look back and see was obvious was the theme to invest in internet companies at the beginning in 1993, 94, 95. That was real early. I mean, I had just gotten out of university, Boston University. My first year on the job, I was at an investment conference at a show called, it was AEA. So it was American Electronics Association out in California. They took over, I think it was the Hilton, the Hyatt. Can't remember right now. In Monterey, California. They ripped out all the beds from all the rooms. They put in tables and chairs. Every 45 minutes, you could go into a different room and listen to a management team of a technology company tell you, why you should own their stock. I went into a meeting with a company no one had heard of before called Yahoo. Stock was 30. I came out of that meeting and I went to my partners, and I had just gotten into business. So I was the youngest one at the dinner table that night. And I said, this is the most incredible story I've ever heard. This is like investing in television back when TVs were first introduced, and investing in television when they went from black and white to color in the 60s, and owning shares of CBS. It's a question of eyeballs. Whoever's got the most eyeballs, that was the story. The stock went from 30 to 15. 30 to 15. Okay? I'm telling you this to remember this. I remember it, right? I want you to understand the investment process here. 30 to 15. So was it wrong to invest in Yahoo? It dropped 50% in the next 4 months. And then, of course, it went from 15 to 450, or was it 500? Something ridiculous over the next 5 years. So should I be discouraged because it dropped from 30 to 15? Well, I was back then because I had just gotten into business. It was early. Nobody really understood the internet. People were still getting mail literally in a mailbox. And they used these things to open the mail. They weren't using this. It turned out to be a huge investment theme, and fortunes were made on it. Then I can remember an investment theme. Again, a hard one for people to grasp, but there was the mapping of the human genome. This is in the late 90s. They were mapping the human genome. The investment opportunity off that was enormous. The number one company that has dominated that space from inception is a company called Illumina. 20 years ago, we were buyers of that stock on a split adjusted basis of under $3 a share, and the stock today is trading at 341. Massive success, massive theme. Multiple drugs discovered because of Illumina's products. I've been here before, and I'm sharing this information with you because the opportunity presented to us in marijuana stocks over the next 1 to 3 to 5 to 10 years to 20 years is enormous. You can make your second fortune on it. And if you're new to this, you can make your first fortune on it if you invest correctly. It's not going to be easy. Yahoo went from 30 to 15 before it went to 500. There have been numerous 50% declines in the price of Illumina on the way from 3 to 340. So it's not easy. But what you do is you identify a theme that is undeniable, and you put that on your whiteboard. And then you identify the stocks or the companies you think will be the best companies to benefit from that undeniable theme. And you do your homework and you do your research. You listen to conference calls, you talk to management teams, and you do that every single quarter. And you begin to gather a wealth of information that you can make money with. You buy weakness. You hold core positions and you trade around it to insulate yourself from the volatility. And you wake up 5, 10, 15, 20 years from now with a whole nother fortune. That's the opportunity in the cannabis stocks. And what I find amazing about this opportunity, it was hard to explain to people what the internet was in 1993, 94, 95, 96. It was hard. It was exceptionally hard to explain to investors the importance of mapping the human genome in 1998, 99. I mean, we all thought it was interesting, but how do you make money, right? And we handed to our investors in our own personal portfolio the idea of Illumina. Flew out Torrey Pines, California, sat down with Jay Flatley, the CEO, and he laid out for us his plan. And this is rare, but what he laid out to us 20 years ago is exactly what he executed, all the way up to the point where right now that stock is still in our accounts because we're finally at the stage that he told us about 20 years ago where the benefits of mapping the human genome and his technology would bring personalized genetic medicine to everybody at an affordable cost. We're getting to that stage now, and so it's still one of our positions in our portfolio. But I digress. What's the greatest, most exciting part of this cannabis story to me is that it is not difficult to explain to people how important cannabis is. It's not the human genome, and it's not something called the internet. People have been smoking weed for centuries. There's already medical proof that it reduces inflammation, that it increases libido, that it increases happiness. These things are facts. Everybody understands it. This is like investing in alcohol after Prohibition. But alcohol doesn't really have any intrinsic health benefits. The cannabis story, there is medical proof, and there are many companies right now doing clinical trials to further prove the benefits of CBD oil, THC, and the combination of both. I've never seen an opportunity this good in my 30 years. And I've lived through some incredible opportunities. My favorite way to play it, the easiest way to play it right now is MJ. It's the ETF of the whole group, marijuana, MJ. I'm doing research on companies. I've covered every conference call that I care to cover so far, and I'll keep doing it. For the individuals who are working with us, of course, I share with them what stocks that we're buying. For the accounts that we manage through Interactive Brokers, we have our conservative, balanced, and aggressive approaches. Our aggressive approach owns some of these names right now in the portfolio. A couple days ago, I told you nothing escapes a bear market. That's true. Nothing does. I might have to be out of these stocks by the end of the week. The whole market implodes again. But they will be the first stocks I buy every single time it looks like a window's opening to put risk back on. Now, I don't know what stage we are in the process. Is this 1993, like the internet stocks? And so, boy, it took 6, 7, 8 years before they became like huge ideas. And there was massive volatility in there. I don't think so. My sense is it's not 1993. My sense is it's more like 1998. We're close to a major breakout in this space. The reason I say that is that traditional companies in other industries are making massive capital investments in the cannabis industry. Constellation Brands. I told you that was a watershed event on the 15th of August. And I told you that day, and many days after, that they would not be the only major company to make an investment in cannabis. And then, of course, last week we had Altria buying shares of Cronos, putting 1.8 billion in. So we have 5 billion in to Canopy from Constellation Brands, and we have 1.8 billion in to Cronos from Altria. And there's going to be others. I have no doubt there'll be major medical companies, drug companies that buy cannabis companies. There's also going to be a wave of positive announcements as the dominoes keep falling when it comes to the legality of marijuana. Just yesterday, there was a story in the New York Post. Who knows if it's going to be true? Governor Cuomo is thinking of making New York State a recreational adult use state to go along with Massachusetts, to go along with Michigan, to go. I mean, listen, the dominoes are falling. There's too much tax revenue for the states and eventually the federal government to ignore. This is not, don't debate the vice or non-vice issue of marijuana. Just stop with that debate. It's got nothing to do with that. It's got to do with money, tax revenue. It's going to be approved everywhere in this country eventually because there's just too much money at stake. So we are overly focused on the U.S. aspect of marijuana. But what's going on around the world is phenomenal. I was just on the conference call, Canopy, for instance. You know, they're rolling out their product in Jamaica and all across the Caribbean where it's being legalized. So you've got, I don't know how many billions of people. Billions? Certainly millions of people that go to the Caribbean every year for vacation. And they're going to have adult use experiences with a brand that they can trust by Canopy. And then they come back to the States, and as the dominoes fall, you've got a company that's branded. Why do you think Constellation Brands put $5 billion into Canopy? You know what else they're doing? This just kills me. Canopy is doing clinical studies to prove the benefits of cannabis in the geriatric community. It helps these communities reduce the amount of drugs that they're taking and improves their quality of life. Think about the ramifications of that. Eventually, we're going to have insurance companies covering the purchase of THC for geriatric people, the community. Now, I don't know when this is going to happen. This is a theme, guys. Don't run out there and just buy all the stocks today. The market's in a nasty downtrend. I just thought I'd change the conversation today because I've been talking about how ugly the market is and just share with you, look, while that's happening, we still do research. The cannabis theme is enormous. So do your research. Go on your own, do your research. I named Cronos and I named Canopy. These are the companies that already have billion-dollar investments. There's going to be other companies out there that will get massive investments. Okay? So while I'm out there short the major indexes and I'm holding a lot of cash, I still have exposure to this group. First of all, the algorithm tells us to be long marijuana stocks right now. So we have a specific algorithm designed for ETFs, and the ETF algorithm is telling us buy the marijuana stocks. So I'm going to be long the marijuana stocks every time our algorithm says there's a window of opportunity. I'm willing to take the risk. It's a small amount of risk. I'll stop myself out quick if it doesn't work, and I'll reload the next time. And then I go in there and I find the names that I think are most important, and I put those names in the portfolio too. Okay. The other group I wanted to just mention is I've mentioned it on and off the last couple of weeks. For income accounts, guys who are looking to collect dividends, I think it's hard to ignore at this point the 11% yield in AMLP, Alpha, Mike, Lima, Papa. The energy stocks have been destroyed. The price of oil has collapsed. And I've talked about this ad nauseum, that they've collapsed in large part because of a hedge fund unwind trade, right? The price of natural gas went through the roof and oil collapsed. That was not normal. So that's unwinding itself. That unwind is coming to an end. And we're getting a double bottom in AMLP at call it $9.50. So to me, as long as it stays above 9 and it's paying me 11%, I've got to put that in income portfolios. At this stage, we got an algorithmic entry point in this group, and it's 11% yield. It's better than the 10% yield after the cost. I mean, it's an ETF, so they take out some cost. It's still better than the 10% yield. That's sick. So if they could just go sideways here and I can collect 10%, I'm a winner. But if the price of energy recovers at all, and if, let's say, we're not in a bear market and we come out of this correction and the market starts going up, the stock will easily go back above 10, and I'm going to have a capital gain and I'm going to collect 10%. As long as that double bottom holds, I think it's just behooves us to the reward is worth the risk, right? That's what I'm trying to do every day with you guys. Try to unload or unveil ideas where the reward's worth the risk taken. And there aren't a lot of places right now in the market. I think the risk is way too high and the market's ugly. But a better than 10% yield after cost in the pipelines, I can't ignore. And I will not ignore entry points into the marijuana stocks. I'm going to be taking that entry every time with a correct exposure, right? You have to look at your own portfolio, determine how much exposure what the risk you're willing to take, and get your piece. And I may even hold a small piece long term, right? And I'll just trade around it because I believe it's a core position that over time will create phenomenal results for me. And hopefully for you. So I hope you guys have captured some of the essence of what I'm saying. I want you to be very careful out there investing. It's dangerous right now. Continue to do homework, continue to build your whiteboard, and continue to watch me and listen to my podcasts. Thank you for being here. It helps me execute on my own plan because I'm expressing it to you. Any questions, feel free to reach me either through an email. You can go to my website, rosenthalcapital.com. You can give us a call if you'd like. I'll pick up if I'm able to. Certainly after 4 o'clock is the better time for that. And I look forward to talking to you again tomorrow. All right, take care.